Is Netflix stock a buy? Netflix has been one of the most hyped and honestly one of the best performing stocks so far in 2018. It's up over 80% so far this year, even after a correction it experienced recently. Before that, it was up over 100% so far this year. But now the question is, after this pullback, is Netflix stock a buy? Are we getting a good bargain now with this price reduction? Or should we wait longer to get even better value on this stock? Well, let's do a deep dive analysis on Netflix and find out. Hey guys, if you're new to the channel, make sure to subscribe down below. I love doing these deep dive analysis videos. You guys love watching these. So leave a comment down below as well if you want to see your favorite company and you want me to do a deep dive on that. And of course, if I do see a lot of traction, a lot of people like that comment, I will make a video on that. Also, don't forget to join our Facebook group. We're approaching over 700 members now. I may close this group off just to kind of keep it a smaller group and more tight-knit. So if you do want to get in, make sure to join that ASAP. I'll leave a link in the description as well as a comment section. Okay, so today we're going to be talking about Netflix, one of the FANG stocks, one of the hyped stocks in the market, one of the best performing stocks actually in the market and so far this year. What I'll do is I'll go over the company itself, some of the financials, some of the competitors, things you should be or shouldn't be worried about as an investor, and then we'll look at the numbers and figure out if Netflix is a buy, sell, or hold. So if you're not familiar with Netflix, they're actually traded under the ticker symbol NFLX, and they're essentially a streaming platform that provides access to TV shows, movies, documentaries, original content. And for anyone who's watched or subscribed to Netflix, you'll know that there's so much content on there, you can never really get through all of it. And the way they do this is they offer a subscription model where users can subscribe monthly. They can have family plans, they can have individual plans, they can have high definition, 4K plans, a lot of different options you can do there depending on your price and your budget. So as of July 2018, Netflix has around 130 million total subscribers worldwide, which includes around 57.5 million in the United States alone. So there's still a lot of opportunity, but you gotta keep in mind, yes, the US has something like 350 million in population, but these are also households. So some people have about 4 or 5 people in a household, some people have family accounts that they share. So Netflix is kind of reaching a plateau here in the United States, but we'll get more into that later. So their services that they currently offer are in 190 different countries, and they aim to continue expanding this and continue focusing on their worldwide efforts as they continue to grow, and they're also looking to enter new markets as well. Now, a good chunk of their expenses comes from production of original content, which usually accounts for billions upon billions of dollars, and this usually goes into debt for the company because they can't really sustain that and pay that in cash because of all the content that they keep producing. So Netflix currently has a partnership with the Chinese company iQ or iQIYI, and they're a streaming service pretty much in China, and the agreement that they have is that Netflix is pretty much lending out their rights for the original content so iQIYI can stream that on their platform. So it's just going to give Netflix more exposure in China because of course they're not allowed to be a direct provider there in China where people can subscribe, at least not yet. So in my opinion, they actually have a huge opportunity to continue additional income from their merchandising of their top shows. Their top shows like House of Cards, Stranger Things, 13 Reasons Why, etc. They can make t-shirts, mugs, other random things that people can buy. And of course, this will just be additional revenue on top of the subscription for the Netflix platform. The last thing I want to mention about Netflix, and probably my most favorite thing about Netflix and the platform, is that their app or platform is actually available on almost any device you can imagine. So you have iOS devices, you have Android devices, you have Windows devices, you have gaming consoles, you have things like Fire Sticks or Google Cast. Pretty much anything supports Netflix, and that's what I like because it reduces the barrier for entry for new customers to consider subscribing to Netflix. Another big thing in regards to this is that a lot of smart TVs come with the Netflix app installed. So that's another reason why a lot of people subscribe to it, because now it's even easier to access the app. All they have to do is just subscribe to an account, log in the first time, and then they have full access to all of the content on Netflix. So now let's talk about the competition, because this is where it gets kind of interesting, and this will kind of determine where the stock and the company moves over the next few years. So Netflix has been the #1 player in this space for a few years now, but competition, in my opinion, is really heating up as other companies really want a big piece of this pie. So big companies like Apple, Amazon, and Disney are among the biggest threats, in my opinion, currently to Netflix as it's going into 2019 and 2020. So Apple has actually been experimenting with original content. If you haven't heard of, they've actually been putting money into that. And it's starting to become clear that they really want to be a big player in this space and kind of encourage users to stay within the Apple ecosystem while they offer these services to their existing customers. Now, Amazon has a very similar model with their Prime Video. So with the Prime subscription, you have access to Prime Video. And there's actually been rumors that they're kind of trying to work on revamping this to be more competitive with Netflix. And that'll actually be another interesting to see because I personally have a Prime account. I've watched a few things on Prime Video, but I find the interface of Netflix a lot easier to navigate. So I don't really spend a lot of time on Prime Video, but if they do see an overhaul for that, that could be another reason that I'll spend more time on that platform. Now the last, and I think the biggest threat, at least for the short term, is that Disney actually recently announced, if you haven't heard, that they plan to pull all of their Disney content from Netflix in 2019. And the reason is because they want to start their own streaming platform where they're going to pretty much offer all past, present, and future Disney content on there. Now this includes any brands that Disney owns like Star Wars, Marvel, etc. So you're going to get all of that content on one platform, ideally from Disney. So in my opinion, it's pretty clear that some of the largest companies here in this space or in the world really want to be part of this market because they do see a lot of potential there. And Netflix, as a company that has a lot of debt, is going to have kind of a really hard time, and it's worked cut out for it in 2019 and 2020 as these other big players with a lot more cash on hand come into the space and start spending to get more users to join their platform instead of Netflix. So now there's a lot of analyst action going on here with Netflix. So I've only included the last 4 months here, and we have 20 analysts that have come out and put their rating on the stock. So 14 of these analysts are bullish, 1 is bearish, and 5 are neutral. Surprisingly, I was expecting it more to be even between bulls and bears because Netflix is one of those stocks that people like to short, but there's a lot of momentum behind it too. So it's kind of interesting to see here that majority are bullish. Now, if you look at the average price target from all these analysts, it comes out to around $425, which gives us around a 17.5% upside from where the stock is at today. So in 2018, up until the last earnings report, which happened a few weeks ago, it has been an excellent year for Netflix, and it was up over 100% in 6 months or so. Now, after its earnings report, it did post misses. It did miss on user growth and subscriber numbers, so the stock did take a hit. And so far, we haven't seen a full recovery, and we are trending downwards, at least for the short term here in the stock. So if we look at the graph here, we can see that it's currently testing its 100-day moving average. And I suspect that it's going to kind of test it for a little while more, and that's when it'll decide if it wants to move higher or lower. If we see some more catalysts come out, say Disney releases a lot of good news, say they're going to release their platform, and investors like what they see, that could affect Netflix directly, and that could actually cause the stock to dip even lower. However, there could be good news that comes out. Maybe the next earnings report from Netflix will actually beat on the subscriber number, and that could be a catalyst to move the stock even higher. But as of right now, we can see that it's hovering around the 100-day moving average, and I personally would like to see this pull back to the trend support that we can see here, at least a 200-day moving average, which is around $300 or so. Now, looking at some of the fundamentals here for Netflix, this is where it gets a little uncomfortable as an investor, especially if you're a value investor. You probably would never consider investing in Netflix at these prices. So Netflix has a current PE of around 147 with a forward PE of around 80. So to be fair, what I'll do here is I'll compare Netflix with some of the biggest threats to them in 2019 onwards. And that, of course, would be the Disney streaming platform. So I'm going to compare Netflix to Disney's evaluation. Now, Disney trades at around a 18 PE with a 15 forward PE, which is much more reasonable than what Netflix is at. So this is another reason why I think we're going to see a significant pullback at some point in Netflix, because I believe at these prices, it's significantly overvalued for the service that they offer. Now, on top of this, Disney also pays out a dividend, a 1.5% dividend, where Netflix, of course, does not pay that because they're reinvesting all of their money into their original content. Now, if I was a Netflix shareholder, I would not expect a dividend anytime soon in Netflix because, like I said, most of their profits, if not all their profits, are going back into the business to produce more content, to sign more licensing deals, etc. So don't expect dividends on the stock, but you could potentially expect a lot more growth from the stock. Balance sheets, this is another one which is a big red flag for me personally. Cash to investments is just around 3 billion or so, 2.8 billion. Where debt's just under 13 billion, so they have a cash debt ratio of 0.217. Now, this is extremely high and it's probably one of the worst balance sheets I've seen personally. And like I said, mentioned a few times already, a lot of this debt is attributed because of their original content, because they put a lot of money into that. Billions upon billions, actually. So their cash balance is actually fairly low at around 2.8 billion. And this kind of leaves me a little bit uncomfortable because if the stock does experience some turbulence, maybe the market experiences some turbulence, we're going to see a lot of investors selling out of the stock because they're not going to be sure if Netflix can sustain it with these high of debt levels. So what I think Netflix really needs to do is start generating a lot more income, even if that means raising the subscription fee for their service. I think that if they raise their fee every year or every couple of years, people will still continue to subscribe to Netflix, but it'll help their income a lot more. Okay, so getting into the most fun and interesting part, which you guys love to see, according to the analytics at least. We look at the information here, we can see, first of all, I want to note that the revenue is actually divided by 10 and the stock performance is actually divided by 100, just so that we can have things more in line. And you'll see that in the next chart here that we'll see in a second, where it actually helps to visualize it better. So anyways, revenue has actually been increasing double digits every single year for the last 5 years, which is an excellent thing to see, especially for a company that's growth. You're seeing anywhere between 20 and 30% growth year over year, which is absolutely phenomenal. Now, apart from the blip that we had in 2015, operating income and net income have also been very strong. And in 2017, we actually saw triple-digit growth. That's over 100% growth. And in net income, we saw almost a 200% growth year over year. That's absolutely phenomenal. And this actually kind of shows why Netflix stock moved up so significantly in the last year or so. Now, what I really like is that capital spending in the last year actually reduced, which is something I love to see with companies that are mainly software and services company, because they should not be spending that much on capital spending, and it's good to see that Netflix is actually taking account of that and they're reducing that. Now finally, the last thing of course is the stock performance, and the stock performance in 2017 was 183% year over year, and that kind of reflects and that kind of goes in line with their net and operating income, which also increased triple digits year over year. If we take a look at the chart here, we can actually see the actual exponential growth that this stock has been having. So the first thing that really stands out to me is the stock price, which you can see has been literally going exponentially. But you can see that things like the revenue isn't increasing as fast, but their operating income and net income is increasing at a pretty fast rate. So that's kind of justifying, in a sense, why the stock price is moving up so high. Now, because we're increasing at such a steep rate with the stock price, you could see a significant correction in this at some point in the near future, and that'll bring it down to more reasonable valuations in my opinion. Now, capital spending, like I mentioned, has reduced over the last year, and I hope they continue with this because the more they reduce that, the more their profits are going to increase. So it's good on Netflix to actually take account of that and actually look into reducing that. So now let's kind of conclude what we've learned here about Netflix and figure out if the stock is a buy, sell, or hold. So in summary, really, Netflix is the dominant player in one of the biggest industries currently, and that's the streaming media consumption industry, where everyone wants to get into this space, it seems. So as we enter 2019, there will be increased competition from some big names like we talked about: Disney, Apple, Amazon, maybe even Google, maybe even Facebook. You never know. These companies have a lot of cash on hand, and if they see opportunity here, they might enter this space as well. Now, Netflix has a huge advantage over these rivals currently, as they're ahead of the game. They developed this platform before any of these guys, and they have the largest user base for their platform. Now, what they need to continue doing is continue generating great content, continue encouraging people to stay subscribed, and continue to get more subscribers worldwide, because if they fail on any of these three aspects, in my opinion, they're going to lose to one of these big players entering this space. Now, the current expansion into worldwide markets will actually help growth over the next few years, as like I said, growth in the US is kind of plateauing and the numbers aren't really impressing investors anymore. So investors are really looking to the worldwide growth to move the stock even higher. Now, overall, Netflix has potential to continue being number one in this space, and based on its current valuations, investors are buying the story and they do believe that Netflix is going to be number one as they are currently. Now, if I personally was an investor in Netflix, I'd keep a very close eye on the Disney platform and any announcements or news surrounding that, because I think in the short term at least, that'll be the biggest threat to the Netflix platform. Now, in conclusion, really, my rating on Netflix, at the current price that it's at, I would say Netflix is a sell. Now, I know a lot of people are not going to agree with this. A lot of people are bullish on Netflix. A lot of people are buying Netflix at this price. But I don't think that there's enough value at this price to justify me entering a position here. Now, a price under $300 would be a little bit more reasonable to me. But an ideal entry for me would be around $200 because that's where I would see good value in the stock from both a fundamental and technical perspective. Now, the question, of course, is will the stock actually drop to around $200 in this market? Probably not. But I think if we enter a recession or we have a lot more turbulence in the market, that Netflix will actually be one of the hardest hit stocks because people are going to be afraid of holding a company like this that has such large amounts of debt. And I think that can actually work against them in a weaker economy. But as it stands right now, Netflix is fairly strong. I'm not an investor, but that's just me. So I really want to hear from you guys. I want to know if you guys are an investor in Netflix. Make sure to comment it down below. I want to see how many of my viewers are Netflix investors. If you're not, maybe you're considering Netflix, and I'd like to hear what price you would consider picking up Netflix at. Either way, guys, thank you so much for watching. Don't forget to hit that like button. Don't forget to hit the subscribe button. And don't forget to invest positive.